Coming up next, we have a presentation from Wesdome Gold Mines. Wesdome is a Canadian gold producer committed to unlocking the full potential of its underground operations in Ontario and Quebec. And here to present is Guy Belleau. Please help me welcome Guy.
Thank you very much, Mary, and merci beaucoup à tout le monde d'être ici aujourd'hui. Ça fait un sentiment spécial d'être de retour dans ma ville natale. And thank you to all for, thank to everyone who is here today to attend this conference. Before I get started, please take a moment to view the safe harbor slide just behind me, as I will be making forward-looking statements during my presentation. Wesdome is a high-quality mid-cap gold producer offering a high-return, low-risk opportunity. From an investment thesis perspective, Wesdome ticks all the boxes. Our assets are in Tier 1 jurisdictions. We have two of the highest-grade mines in North America. Our margins are expanding. We are generating a robust free cash flow. And we have a compelling organic growth profile. On top of that, our balance sheet is clean and debt-free. We are accumulating cash, allowing us to self-fund our organic opportunities. We have made a lot of changes over the last year and have a clear line of sight to growing production and margins. The importance of jurisdiction in mining cannot be understated. And we have mines in two of the best jurisdictions in the world, the provinces of Ontario and Quebec. Canada, and in particularly Quebec, provides many advantages, including experienced, skilled labor, a stable regulatory framework, good security, and high environmental standards. This allows significant risk mitigation and the ability to maintain our focus on operating the business. Canada is also renowned for having some of the most prolific mining districts in the world. Our Kiena mine lies on the Abitibi Greenstone Belt in Val-d'Or, and our Eagle River mine lies on the Mishibishu Greenstone Belt about 50 kilometers west of Wawa. Each of these mines has been operating for decades, and together have produced more than 4 million ounces of gold. But we believe that this is only a beginning. Wesdome currently has a market cap of over 2.5 billion Canadian. As a publicly traded company for more than 20 years, our shareholders appreciate our disciplined and thoughtful approach to share capital. This sets us apart from many mining companies and is just one of the reasons why we have attracted many top-tier analysts and long-term shareholders who are passionate about our company. Companies are nothing without their people, and we have a very knowledgeable and experienced team at Wesdome. From the miners underground to surface workers and corporate employees, each and every person in the organization has an important role to play in Wesdome's successes. Our top priority is to keep all of our people safe and secure. Wesdome is built on a culture of ownership and care, focused on positively impacting not only our employees, but also our communities and the environment. ESG is deeply embedded in how we operate, and we're proud to maintain one of the lowest carbon footprints in the industry. The recent delivery of 2 Epiroc battery electric haul trucks at Kiena, the first of their kind in Quebec and among the first in Canada, demonstrates our continued commitment to minimizing environmental impact and enhancing working conditions for our employees. Wesdome has built a strong reputation for consistently creating value for shareholders, and 2024 was no exception. That value, which is especially clear when viewed on a per-share basis, is driven by 2 main factors. First, our board and management have taken a very disciplined approach to managing shareholder dilution over the years. Second, we've consistently delivered strong fundamental performance. Since 2016, our per-share production has tripled. Even more impressively, our operating cash flow per share has grown nearly tenfold over that same period. Just as important, we've been able to replenish and even grow our mineral reserves and resources during a time of significant production growth. This is a powerful testament to the strength and potential of the Kiena and Eagle ore bodies. Wesdome is a highly quality mining company. On any metric that matters, the low risk, high reward nature of the company speaks for itself. Whether it's be jurisdiction, cash flow, grade, or balance sheet, we surpass not only our peer group, but also the large cap producers. We have robust free cash flow margin, translating into solid free cash flow yield, placing us in the upper quartile of the peer group. To ensure that we continue to deliver value on a per-share basis, we are focused on very straightforward organic growth strategy to fill our mills. When these mills were first built many years ago, the ore profile of the mines looked very different. They were lower grade and higher tonnage. Fast forward now 3 decades, and we now have 2 high-grade mines and mills that are running at less than 50% utilization. The goal is to increase that to an overall equipment effectiveness of over 80%, and we have a clear plan to get there. Our strategy to fill our mills rests on 3 key pillars. 2 are production-driven, and 1 is cost-focused. Together, they form the roadmap to unlocking the full potential of our infrastructure and driving stronger returns. The first initiative is the global resource model. As many of you know, Eagle River has been operating for over 30 years. In that mine, we've drilled, sampled, and mapped millions of meters. But until recently, none of that critical exploration data was centralized, let alone digitized. Over the past 18 months, we've changed that. We've taken all of this valuable information and computerized it. You can just imagine what we have learned about our ore bodies in the process. For example, we've identified new near-surface targets. We are also analyzing differential cutoff grades, something we couldn't effectively do before. In short, we are uncovering new opportunities across multiple mining areas, opportunities that simply were not visible to us previously. So why is this important to our shareholders? Because this global model, or as much of it as we can get QA/QC'd by this fall, is expected to form the foundation and comprise the majority of new resources underlying next year's technical report for Eagle River. The second initiative supporting our fill the mill strategy is exploration, which has been the cornerstone of Wesdome, and it starts with our prospective land packages. Kiena has 75 square kilometers situated in the heart of the Abitibi, one of the most prolific gold districts in the world. The mine has produced over 2 million ounces of gold, yet we have barely touched the surface in the exploration of Kiena's land package. With only 3 of more than 20 targets included in our mineral reserve estimate, and with new targets continuously being generated, we now need to focus on bringing the highest priority targets into the next category. Eagle River is equally prospective, and our 100 square kilometer footprint in the Wawa Gold District is set to quadruple upon the closing of our acquisition of Angus Gold at the end of June. We're taking a long-term strategic approach to exploration. Our 2025 exploration budget is approximately $40 million, and with 76 targets in the lower categories, you can see there is no shortage of opportunities for us to work on. The positive impact of filling our mills goes well beyond production. The third pillar focuses on cost and efficiencies. These are several ways we are working to reduce costs. First, by filling our mills, we're looking to leverage our fixed costs over a larger production base. On top of this, we are embarking on a series of continuous improvement initiatives that focus on improving productivity and planning, supply chain optimization, and cost reduction through the use of technology and automation. While still early in the process, we are already seeing clear gains in productivity and lower unit costs. Organic growth has been the backbone of the Wesdome story for many years and will continue to be front and center as it is the most prudent return of value to shareholders. The fact is that what we have two high-quality assets situated on prolific gold belts with untapped potential, both at the exploration and optimization levels. We feel strongly we can continue to organically grow the production per share metrics and believe that having such a compelling organic strategy lessens the pressure to do M&A. That is not to say that we're not open to and aware of opportunities, but rather we can be prudent in our approach to this strategy. We have strict M&A criteria, and any allocation of capital must be accretive to our shareholders. We do not feel we need to grow just for growth's sakes. Everything we do must drive value. There will be lots to talk about in the coming months. The next year will be exploration heavy, and we have a couple of projects underway, including the Presqu'île ramp at Kiena, which is expected to be completed by year-end. The completion of this ramp will be a major milestone in our fill-the-mill strategy, as it marks the final step in unlocking mineralization along the 33-level drift. And looking forward into 2026, updated technical reports are planned for both operations in the first half. We look forward to keeping you informed as we advance our activities and deliver on our commitment to driving value for our shareholders. To wrap things up, Wesdome has built its reputation for being a low-risk, high-reward company with strong and robust cash flow generation. We have no bank debt. We have no streams, no warrants. We have no convertible securities. We have great relationship with our supplier and with our stakeholders around our mines. We have a low carbon footprint, and we have a cash balance that continues to grow. Everything that we do is focused on maximizing value for our shareholders. This is an investment that speaks for itself. Thank you very much. Merci beaucoup. Bonne fin de congrès à tout le monde.